I'm just doing I'm just doing part-time job. I'm looking for. Yes, you can start with what you have. So I'm going to start this again, and it is like this. The most expensive thing we pay in Canada is taxes. The most expensive thing we pay in Canada is taxes. The most, I don't know how to repeat this 1 million times. Okay, the most expensive thing we pay in Canada is taxes. I'm going to prove it to you. One, every 2 weeks we pay taxes. Excuse me. When you receive the leftover, you go to Walmart, you pay taxes. You go to Dollarama, you pay taxes. You go to a restaurant, you pay taxes. You go to buffet, you pay taxes. In fact, when God bless you, you want to buy a car, you are still going to pay taxes. You buy a property, you are going to pay taxes. You take a plane ticket from one place to another one, you pay taxes. You fuel your car, you pay taxes. In the morning, you pay taxes. In the afternoon, you pay taxes. You sleep, you use the fan, you use electricity, you pay taxes. You wake up, you pay taxes. We pay taxes is just the most expensive thing in Canada. We all pay taxes. It is legal. You have to pay taxes. I have to pay taxes. So because you have now discovered that we pay taxes every day in Canada, whether you think about it or not, I am going to shock you. So one of the things you should do for yourself and for your money is that you want to understand the types of investment that is tax free. You want to do that, at least have at least two types of investment that is tax free. Right, TFSA is number one, and you can also invest under your life insurance policy. Guess what? You are the one that would make that decision. Nobody is going to make it for you. So if you know that we pay taxes every single day, why not understand the fact that you can work with a professional that can teach you and guide you on tax-free investment? If you are listening to this right now, there are some mistakes I have realized based on the fact that I've been doing this for a couple of years. I have seen people that have savings account, but they don't have tax-free savings account. They are two different things. You know, we have Coca-Cola with sugar, and then we have sugar-free Coca-Cola. That is how it works. A savings account, the money you put into a savings account is subject to taxes. So the interest, let me rephrase that statement. When you put money into a savings account, that your money is not the one that is taxed. The interest that you earn is the one that is taxed. The interest in your savings account is taxed. Okay. But the interest you earn or the dividend you earn in a tax-free savings account is tax-free. So do yourself a favor. I have told you the most expensive thing we pay for in Canada is taxes. So why wouldn't you have tax-free savings account? You're keeping your money in a savings account because you don't know. Now that you know, a normal savings account is taxable. The interest that you earn in that account is subject to taxes. Okay. That is why we have something that is called tax-free savings account. And a tax-free savings account is tax-free. But you are allowed to invest. I am allowed to invest. I've seen also another mistake. People have TFSA, FHSA, they just dump money there and then they close their eyes. No, such accounts you are supposed to invest. Such account you are supposed to invest that account. Don't make some mistakes that some of us made in 2019, 2018, because nobody taught us all these things and our money was wasted. You know, if you waste money, God bless you, you can still recover that money. But when you waste time, I promise you, time wasted, before you recover that, you have to do prayer and fasting for 1,000 years. So you can still, if you waste money, fine, you can still recover money. But once you have wasted time, 3 years, 4 years, 5 years, no investment, you are thinking that you will do it tomorrow. Close your eyes and open it now. Before you know, we are already in December 2026. Close your eyes and open it. So they say a word is enough for the wise. I will introduce myself again. My name is Yemisi Lekushe. I'm a licensed financial security advisor. Please, I would like you to Google that name. Google that name, ChatGPT that name, Claude that name. I think you should be able to get something about me on Google. I'm a licensed financial security advisor. Yeah. Good question. So yes, so my name is Yemi Silebushe. You want to buy shares, how much will I receive in a month? Pretty, I don't have answer to that question, unfortunately. If there is no specific rate of return, it's going to fluctuate. So if you are looking for something specific every single month, then you can't buy shares. The only thing you can do is GIC. GIC will fix your interest every time, right? But if you are looking to buy shares and you want me to tell you the rate of return every single month, that answer does not exist, right? When you buy shares, it's going to fluctuate. In one year, it could do 10%, 12%, 25, 40. It is going to fluctuate because it is designed to fluctuate. So if the economic situation is has some issues, it's going to fluctuate, come down a little bit. After some time, it goes up 40%, 25%, 10%, 2%. So if you are looking for something specific every month, then you can buy shares. It's going to fluctuate pretty gigi. It is going to fluctuate. I hope I answered your question. Hello, Chef D. How are you? Blessing Bello, Joseph, Browse and Beauty, Lady Viewers, Mabel. How are you guys? Anwa, Camila, Tina Wins, Angelique. Wow. Hi, Gia, Miss Vaughn. On your phone, please tap on your phone. That's, yeah. Mabel, how are you doing? Thank you for the follow, Lady B. Thank you for the follow. So, one way I can also teach you to give you an idea is, excuse me, I can give you a list of some portfolios and you go online and see in the last 20 years, what is the performance of this portfolio? In the last 10 years, what is the performance of this portfolio? I teach my clients how to do that. So that gives you an idea that in the last 10 years, this portfolio has done 10%. Like S&P 500 now. Yes, amazing. Yes. Like S&P, yes, this is life. Like S&P 500, if you Google it now, in the last 50 years, S&P 500 has performed like 15 to 16%. When they say average 15 to, that does not mean it has done 16 or 15% every year. It will fluctuate. So they will now do average over a couple of years, then they'll give you a figure. I hope that helps. Oluwatosin, which part of the world are you streaming from? And is your question related to the conversation? Please. Okay. So there, before I can bring you on my TikTok live, you follow me, right? And put your question in the chat before I bring you up. So I know why I'm asking that, and I'll say there is nothing to hide. Yes, Oluwatosin, how are you doing? How to buy shares? Okay, so before I bring you up, you need to, yeah, are you following this account? Let's see. Let me see. No, not yet. So I can answer your question, but if you want me to bring you up, then Pretty Gigi, how are you? Thank you for following. Okay. So when you want to buy shares, there are different companies you can use. I say this because there are different ways to cook rice. You are the one to decide what the taste of rice. I say this because there are different ways to cook rice. You are the one to decide what the taste of rice. I say this because there are different ways to cook rice. You are the one to decide. Okay, so when it comes to investing, people will ask me, okay, what is my suggestion? So I'll make it very clear. Yes, it depends on what you want for yourself. It's either you bank your money or you invest your money. So we have investment companies in Canada. So if you actually want to invest, then you want to consider investment companies. If you want to bank your money, right? That choice is yours. We are all adults and we are responsible for our actions. So I tried to bring you, but I don't know why it was echoing. So when it comes to buying shares, I can teach you guys what to do. We have great investment companies in Canada. We have Wealthsimple, we have Industrial Alliance. So the choice is now yours. So for some professions, for some careers that have some professional liability ingrained in them, for example, accountant, lawyers, medical doctors, nurses, especially travel nurses, right? Or you're an engineer, you're a project manager, you maybe you're a consultant. So if you're a project manager and you're also a consultant, that is you have incorporated yourself. People like that, we always advise. We can't force you because you are the owner of the money. We advise people like that to have their TFSA and RRSP or their LIRA locked in retirement account in a segregated fund. And the reason is because a segregated fund investment, maybe you've not heard about it, let me put it in the chat. Segregated fund investment offers you protection that you need. Your money is protected from creditors, your money is protected from court cases, litigation, your money is protected from probate system. Write that down. See, most of us we want quality shoe, quality clothes, quality bags, la la la. When it comes to investment, you can actually invest with that type of mindset. You want to make sure that your investment are protected. Anybody can invest in seg funds. Seg funds is similar to mutual funds but with like extra packaging. One, your investment whether it's TFSA, RRSP is protected from creditors, is protected from court cases, litigation, it is protected from probate system. Excuse me. Excuse me. Is the money protected from divorce? Jay, that's a very intelligent question. If you had put it inside seg funds before you marry that person, it is protected. I hope you know that there's something that is called there's something that is called 50-50 when there is a divorce case in Canada. So the day you get married, you, and from that day your investment is shareable 50-50 if things go south. I pray it doesn't go south. So that's another thing. If you have you heard about prenup before? Prenup. Who has heard about prenup before? You brought a very interesting topic today. Jay, have you heard about prenup? Prenup is a legal document that you and your partner signs. Whatever belongs to me belongs to me. If things go south in this marriage, you are not touching my property. I'm just simplifying that terminology. Some people will say they are Christians, cannot do prenup. But in this time and age, in 2026, you want to have peace of mind. You have worked hard for your money. Nobody should just sleep and wake up and they are looking for the gold to dig, and then it is your own gold that they want to dig. And because you said you have soft spot, right? You don't do what you're supposed to do. So if you know you are in a sector where your income is going to be very high, you're a medical doctor, you are you, you you're an accountant, you are filing taxes for corporate organization, you are in a sector, you know you carried your leg to a sector where you're going to be a high income earner, please think about prenup. Think about prenup because you never know. Think about prenup. So just to answer your question, Jay, is the money protected from divorce? If you have all your investment that you put in a seg fund before marriage can be excluded from divorce if it was written in a prenup agreement. I hope that is clear enough. Mina Spice, how are you? Thank you for following. So I'm going to repeat myself again, especially for those that are joining. Please like and share. Hello, hello, hello. So let me make this clear, this conversation. It is good to buy shares, but you have to buy it properly. I've had situations where if you do, especially if you don't know, that's another issue. There are some investment that we call non-registered investment. It is different from registered investment. Non-registered investment, your interest is taxable, right? So you can invest any amount in a non-registered investment, you can do day trading there, but your interest in such platforms is taxable. But we have registered accounts, and we have four types of registered accounts. We have RESP for children, RRSP, TFSA, FHSA. You see these four accounts, they are called registered accounts. Okay. When you have this account, when you put money there, I will repeat it again. You put money in this account, you're supposed to invest it. I made my first mistake in Canada was I was working overtime and I thought I was going to have more money. It was a big lie. The second mistake that I made was I opened my first TFSA with a popular bank, and for like 1 year I didn't see anything. Like I wasn't seeing returns, and that was when I started asking questions. What happened? If you're looking at me, you're listening to me today, one of the mistakes you will realize is when you open a TFSA, you think that opening it means you have automatically invested. That is a big fat lie. When you open it, you put money there, you still have to invest it. If you don't do it that way, you have not done well. Evin V, I can't read that name. Evie, how are you? I see your request to join. Which part of the world are you streaming from? And what is your question? Please put your question in the chat. Put your question in the chat, please. I have 3 requests. To bring you up, where are you streaming from? What is your question? Just a brief. And number 3, you need to follow me to join my TikTok live. So please like and share. Let me see. Please like and share. Amazing. For Lee, how are you? Which part of the world are you streaming from? Morpheus, it's going to that question is for we call them lawyers. A lawyer will answer that question because common law characteristic is based on your province. How long have you been common law with that partner? How long? I'm not a lawyer, so I would not want to answer that question in a public place because I'm not a lawyer. Then I don't know your province. Every province is a little bit different when it comes to family, common law, sharing of investment when it is related to divorce case. Okay, sorry about that. More refuse. It depends on your province. It depends on the situation on ground. If there is common law, there has to be significant ground that both of you live together. There has to be before that can be determined. I have a recording actually in case you don't want to, because talking to a lawyer might be expensive, but you can get pro bono lawyers. You can Google it, pro bono lawyers in my city, pro bono lawyers, pro bono lawyers. Google them, reach out to them, ask them questions they are going to ask you. They are sorry, they need to answer your question. Another way is there was a time I did a session with a lawyer. She's a family lawyer, and for my WhatsApp group, and the topic was prenup. I can actually look for that. It was almost 3 hours, so I can look for that webinar, and then I can send it to you. You can listen to it. Sugar, thank you so much. Sugar. Hey, I'm in trouble. How are you doing? Thank you for the follow. Any question for me, please? Any question, any question, any question. So let me know if you have questions for me in the chat. So that gives us this thing. So why do you want to invest? No matter how much you are earning now, start with what you have. Start with what you have. I wish somebody encouraged me like this 10 years ago. Okay, start with what you have. $20, $50 every 2 weeks, $100 every 2 weeks, $200 every 2 weeks. Start with what you have. $1,000 every 2 weeks. Start investing. You can buy shares of Amazon, Tesla, Dollarama. Start investing. Some of you have made a mistake. You have RRSP, you don't have TFSA. When you now want access to this RRSP, then you are subject to taxes. You can access your RRSP to buy your first home or to go to school. But you can't just touch your RRSP. Oh, I want to take out money to buy Christmas gift. I want to take out money for vacation. You are going to be heavily taxed. So you need TFSA. So some people only open RRSP because they know they are going to be able to use it to file taxes and get tax refund. But you also need TFSA, tax-free savings account. The money here, in case you need it for emergency, you can pull out your money without any consequences, right? But this one here, yes, it's going to benefit you when you're filing taxes. It can help you get tax refund, but excuse me, the money there you cannot easily just take it out, except you want to use it to buy a house or you want to use it to go to school. If that is not the case, you take out money from your RSP, you are going to be taxed before retirement, okay? Even at retirement, you're still going to be taxed. So you want to make sure that you know how to invest. You want to know that. You want to know how to invest. Why? It is your job. If you don't do it, nobody will help you to do it. you will be ignorantly paying a lot of money in taxes because you have decided to be busy. You have decided to be busy and you've not decided to learn how to invest in Canada. So why do you want to at least have at least just two types of investment or three different types of investment that is tax free? Just three. In fact, maybe two or three. Let's put it like that. Why do you want to do that for yourself? See, the most expensive thing we pay in Canada is taxes. Yes, it is not that house, it is not that mortgage, it's not that rental property. I'm sorry they deceived all of us. They deceived all of us big time. The most expensive thing we pay for in Canada is taxes. Every 2 weeks you pay taxes. The leftover that they give you, right? You go to Walmart, you pay taxes. Costco, you pay taxes. You go to Dollarama, you pay taxes. You go to a restaurant, you pay taxes. God bless you, you want to buy a car, you are going to pay taxes. Electricity, you pay taxes. Wi-Fi, you pay taxes. So the most expensive thing we pay for in Canada is taxes. So you're an adult. One of the things you should do for yourself is to start investing where it is tax free. For children that are younger than 16, the type of investment plan you can have for that child is called RESP. RESP, Registered Education Savings Plan. RESP, that is what it's called. RESP. And under your child's RESP, when you open it and you put money there, the money should be invested. So RRSP is not for children. RRSP is not for children because you wrote child there. Okay, RRSP is for people that are 18 and above. RRSP is for people that are 18 and above. Okay, right. So for children that are younger than 16, there are only two types of investment you can do for them. One, RESP. Under their RESP, you can also buy shares for them. You can invest for them. You can invest in S&P 500. You can invest in Dollarama, invest in Amazon, invest in Tesla. Because that account, imagine a child is 10 years old, 77 years of investment. A child is 5 years old, 17 minus 5, you have 12 years to invest for that child. So you invest that money. Some of you have TFSA, FHSA, and the money is just sleeping there, right? See, stop making these terrible mistakes. It makes my heart bleed. Stop making these mistakes. I mean, if you can use from your RSP and not get. I don't understand your question. You can send me your request to ask that question. I'm sorry, I don't understand. Okay, you want to use money inside your RSP for your children's education. That's a good question. Okay, I think I get it now. Hmm, interesting. Good question. I would say your own RSP is for you. If you take it out for your children education, I kind of that's a very good question. Hmm. Good. See, let me tell you. When you take out that money, let's even assume you take it out for your own education and you don't pay taxes. The problem is that you still have to put it back. Tina wins, you're welcome. The problem is still you still have to put it back. I hope this helps you. So before retirement, okay, you are allowed to touch your RRSP, take out money. Okay? So maybe you have to call CRA to confirm. You have to call CRA. I like that your question. I like that question. I like your question. I really like that question. But from the top of my head, I'll just tell you it is you, the owner of the RRSP. You are the one that can take it out for your own education. Like I said, maybe please, I don't confuse me. I did not come here to confuse anybody. We have to be very, very straightforward with the questions. I don't understand that last question. Is it only for education? What? Which one are you talking about? Which account are you talking about? You can send your request to join if you would like to do that. Please, if you can do that, that would also make that will give clarity to the questions you're asking. Is it only for your education? You mean RRSP for your own? You are the owner of the RRSP. So it's just like telling me that you want to take out money from your child's RESP for your own education. Does it sound appropriate? No. RESP is for that child, right? RESP. So when you have your own RRSP too, it is for you, right? So if you take it out, you are allowed to take it out for school, for your own education, and also to buy your first house. Okay, I hope that is clear. Mercy, Pena, thank you so much for the likes. Okay, any other question, please? So I'm going to change the topic now, except we have other questions. We're going to take that. So let me change this to another. I have another question. If you have question, put it in the chat. So I have a question for you guys. The question is very annoying. At retirement, do you want to pay 30% taxes, 20% taxes, or 0% taxes? Why am I asking you this question? Why? Because some investments will tax you in the future and some are tax free. Some also are tax deductible. So let me break it down a little bit. At retirement, excuse me, do you want to pay 30% taxes, 20% taxes, or 0% taxes? Hello, Trump. Thank you for the roses. Thank you. Mercy, I've talked about it. I don't know when you joined. I have talked about it. I have. If you want me to, that's why I was asking any question, any question. So at retirement, you want to make sure that you plan for that time. Most of us, before we came to Canada, it took us 2 years, 5 years, 10 years. We planned for it. Yes. Retirement also, you have to plan for it. Why am I saying this? We have government pension, but it is not enough. Please go and ask ChatGPT. I'm not here to argue. ChatGPT will tell you that this is first time I asked. Okay, I didn't see it. I'm so sorry. So let me go back to answer that. I'm just saying it. It's possible TikTok blocked it. Sorry, that was not the intention. I've been answering all the question. Mercy, that question I'm just saying it. I did not ignore it. So I did not. You can see I'm scrolling now. I'm scrolling. I did not see your previous question. I can only see the one that says, have you talked about buying shares? Okay. There are different ways to buy shares. There are different ways to invest in Canada. And the reason why I always use this example is because it's easy to understand. It's not as if I am here to be a clown. See, when you have rice, you are the one to decide how you want to cook the rice. Whether you want to cook it as white rice, jollof rice, coconut rice, you are the one to decide that. So when it comes to investment, there are different ways to invest your money in Canada. You are the one to choose. So when you say you want to buy shares of Amazon, you can buy it under index funds, you can buy it under ETFs, you can buy it in a segregated fund. Can you see I've mentioned like three now? Or you can just say you want to buy just individual, you just want to invest directly in Dollarama. Or for example, when you have a bucket, you have different fruits inside that bucket. It means when you invest and you invest in a bucket of in a bucket of investment, you have diversified your investment. So you are the one to choose. Do you want to just invest in Dollarama, or you just want to invest in index funds where you have so many investment options that has diversified your investment, or you want to invest in ETF? So to invest now, some people say they are using banks, but after 2 3 years, they will say the return is not significant. You can use Wealth Simple, you can use Quest Trade, you can use Industrial Alliance. Look at the four options that I have mentioned. If you now say, yeah, me see you have mentioned four, just tell me which one is best. My question will be like this. It depends on you. Wealth Simple is good, right? But the issue that I have discovered is if you don't know how to, you can download the app, go to your Play Store, Apple Play, download the app. But the issue is if you don't know how, excuse me, to set it up correctly, then you might not enjoy the benefit of investing there. I've seen some people they end up having a registered savings account where the rate of return is just 1.25 just because they don't know. This is Monday. In the last 5 days, I've seen like two people that made that mistake, and because they didn't know. And this is an account they've had for a couple of months. So when it comes to industrial alliance, it is not everybody that would like segregated fund. It's not everybody that would like to go to H&M, that would like to go to expensive stores. It's not everybody. But some people, the reason why they go to expensive is just because of the quality, right? The reason why you buy designer stuff is because of the feeling that comes with it, or the guarantee that comes with it and the quality you get. Okay. So when it comes with segregated funds, in a segregated fund, I'm going to share my screen now. In a segregated fund, you will also be able to invest in Amazon Dollarama at the same time. Three lens, that's what I am explaining. I hope I'm explaining it in a simple way. I hope so. Three lens, when did you join? Did you just join, please? So I know if I have to explain all over again. Three lens, thank you for the follow. Thank you everyone that has followed. Thank you. Ha, big B. So I should go over it again. Okay. So give me like 2 minutes. I would run this through. Okay. When it comes to investment, there are different options. There are different options. The option that's okay, 1 minute. The option that is available is much. It's not like you must do it this certain way. So when you want to invest, the issue is which company should you use and why. Okay, any company you invest in Canada, there are fees. We call it MER. Anywhere you go, whether you go to the sun, to the moon, or you go to under the earth, wherever you go to, any company you go to, there are fees. We call it technically MER. So there are some companies that their MER is low, and there are some companies that their charges MER is high. And there's a reason why it's a little bit high. Like I'm now making an analysis that it depends on what you're looking for. Are you looking for quality shoe, quality bag, you know where to go to. So when you're looking for some investment that offers guarantee, that offers protection, then you want to consider segregated funds. But if you are looking for investment